This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
All right, this is the third and last lecture on Chapter 19 on semi-variable costs. In the first lecture, we revised the high-low method. In the second and the last lecture, we looked at regression and a better way of finding the fixed and variable cost. But I did say one problem is that it assumed from the beginning that the relationship was more or less linear. If it isn't linear, then we can still stick figures in a formula, but it all becomes rather meaningless. Well, there is a way of telling how linear the relationship actually is, and it's paragraph 6 of the notes. It's something called the correlation coefficient. Correlation means how well do they match together. You know, if it's perfect match, it'd be linear. If it's not perfect, it wouldn't be. I'll explain how we interpret the figure afterwards, but the coefficient of correlation, again, you've got the formula on the formula sheet, R. It's n sigma xy minus sigma x times sigma y divided by the square root of n sigma x squared minus sigma x all squared times n sigma y squared minus sigma y all squared. Which looks awful. It's not actually as bad as it looks. But let's do it. Now, already in the previous lecture, we've got most of the figures we need. We know n is 7, the number of sets of observations. We already know sigma xy. We know sigma x, sigma y. We know sigma x squared, sigma x. The one extra thing we're going to need is sigma y squared. So just as we did with the others, let's square the y's and then total them. So 40 squared is 1600. 65 squared, 4225. 45 squared, 2025. 80 squared, 6400. 70 squared, 49. And again 49. And finally 50 squared, 2500. Now you can see again why I wrote them all in thousands. To start squaring 40,000, you'd have so many zeros that to be untrue. Anyway, let's add them up. 1600, 4225, 2025, 6400, 4900, 4900, 2500. I get 26,550 as the sum of the total of sigma y squared. Again, it now simply becomes calculator work, and again I'll do it line by line. Hopefully nobody will get lost. N7 sigma xy 1870 minus sigma x 28 times sigma y 420 divided by the square root of n7 sigma x squared 140 minus sigma x all squared 28 squared times n7 sigma y squared minus sigma y all squared. I hope you're checking me, but let's have a go. 7 times 1870 is 13,090 minus 28 times 420 11,760 divided by the square root of 7 times 1, 4, 980 minus 28 squared. We're all okay so far. So the top bit's now easy enough. The numerator 13,090 minus 11,760 is 1330. Over the square root of 196 times 1,85850 minus 176,400. 9,450. 196 times 9,450 is 185. No, 1852,200. If I take the square root of it, I get 1361. So finally, I get 0.98. Normally leave this to 2 decimal places, but I get 0.98. And before I interpret that, one thing rather importantly, the top bit of the numerator of the equation, here 13,000 minus 11,000 was plus 1330. Our answer therefore is plus 0.98. Now, I'll explain the significance shortly, but you can end up with a negative number on the top. The top could have been minus 1330. The coefficient of correlation R would have been minus 0.98, and it does matter, but I'll explain the significance in a second. But it's the top bit of the equation, the numerator, determines whether it's positive or negative. Well, the significance of R, it will always lie between plus 1 and minus 1. Always. If it's plus 1, we say we have perfect, positive, linear correlation. And what that means is that if we did put all the points on a graph, the points would lie exactly on a straight line going upwards. That they both increase together, which is what was happening with ours. The cost is against the units. As you've more units, you've more cost. So they're both going up. Well, which way around are we? We're both going up together. Well, plus 1. If it's positive, they're going up together. If it's 1, it means it's perfect. It's exactly on a straight line. On the other hand, if R was equal to minus 1, the other extreme, we say with perfect, negative, linear correlation, and that would mean that if we plotted the points on a graph, again it'd be a perfect straight line, but as one went up, the other went down. I'll give you an awful example of it, but instead of comparing costs with production, if we were looking at the death rate from smoking, then surely is it not the case of it, how long you're going to live, that you expect the more cigarettes smoked, the shorter the life would be in years. Now, it's a horrible example, I know. But smoking more cigarettes is supposed to mean you have a shorter life. Well, you could do exactly the same sort of exercise to try and get an equation relating the two. But as cigarettes went up, life would go down. That way, sorry. We'd say with perfect negative correlation. So, if it's 1, it's perfect, positive, negative. If it's 0, we say there's no correlation at all. That put them on a graph and they're just all over the place. It would mean there was no relationship whatsoever. Now, to have perfect correlation is unlikely, for it to be plus or minus 1. But the nearer it is to plus 1 or minus 1, the better the linearity. And so what did we get? We got a coefficient of correlation of plus 0.98. And what does it mean? It means, first of all, it is positive correlation. So they are both going up together, which we can see at a glance. More units, more cost. Secondly, it's not 1. And so we do know that they're not exactly on a line. However, it is fairly close to 1 at 0.98. And so if we did put them on a graph, we would find that it was nearly a line, even though it's not perfect. In fact, you've got to be careful because it's hard to say how perfect it is at 0.98 because it very much depends on how many observations you've looked at. If you looked at 1,000 months and got 0.98, you'd be a lot more confident it was linear than only looking at 7 months. If you think about it, if you only looked at 2 months, if you only ever looked at 2, you'd find the coefficient of correlation was 1 because 2 do lie on a straight line automatically. Anyway, that's what the coefficient of correlation is. That's how we calculate it. That's how we interpret it. And again, in the exam, it's unlikely, well, you won't get a full example and it's set to do all the numbers, but you certainly stand to be asked to interpret the coefficient of correlation, to know what it means if it's positive and negative, and to know that the nearer to 1, the better. Finally, on the last page, just one other thing you could be asked, and here you're going to have to learn the formula, but something called the coefficient of determination. The coefficient of determination, as I say, you're not given it on the formula sheet, but it's easy enough to remember. It's r squared. It's the coefficient of correlation squared. And so in our case, 0.98 squared is how much? It's 0.96, which incidentally is always positive because the coefficient of correlation, although this could be positive or negative, when you square a negative number, it becomes positive. So that's all it is. Watch the words though. Coefficient of correlation is r. Coefficient of determination is r squared. determination, yes, is r squared. And the relevance of it, it means that in our example, 96% of changes in one variable are explained by changes in the other. So in our example, as the number of units changes, you expect the cost to change. Well, 96% of the time, the cost is changing purely because of the units. Okay, there we are. So a very arithmetical chapter, but as always, do have a go at the online multiple choice test. There are 5 or 6 questions to have a go at.